This week, we saw a significant drop in new listings. Mortgage purchase applications took their biggest hit in months. Mortgage rates are still the highest they've been in over 20 years. And there are still less homes on the market today than there were a year ago. How are these high rates impacting buyers? Will prices ever come down? And what does all of this mean for the Dallas real estate market? My name is Michael. I'm a real estate agent here in the Dallas area. And every Monday, I give you a weekly update covering all of Dallas and Collin counties. We're looking at trends, which cities and zip codes are the hottest if you may be looking to sell your property for top dollar, as well as which cities and zip codes are the coolest if you may be a buyer or investor looking for a deal. We'll also be tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, and what's inventory looking like. And if you stick around until the end, I do a top 10 rank list. It's my favorite part of the video. It just ranks the top 10 hottest and coolest both cities and zip codes. If this sounds like something you're into, make sure to hit the subscribe button. And if you're looking to make a move in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is August 28th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here and it'll take you to the latest market update. First up is market news. It's jobs week again. The BLS jobs report comes out this Friday. The Fed needs to see less job growth, slower wage growth, fewer job openings, and higher unemployment claims. So I know all of those things sound negative, but that's what the Fed needs to see in order to drop interest rates. Then also the Fed's main inflation report, called the Personal Consumption Expenditure Report, that comes out this week and hopefully shows progress towards their 2% inflation goal. Then, because I covered this last week, I wanted to take a look at it again. This is the 10-year Treasury chart. So we were looking at this to show the correlation of what will happen with mortgage rates. And if you remember, we needed to stay below this 4.33 number so that we don't head up to 8% rates. Well, we had one close just above, but it came immediately back down, tried to climb up the next day, but ended up closing below the line. So we still need to stay below this 4.33 line, and it rejected pretty hard the following day, and we've just been consolidating here. And I explained it better in the last video, but this is just the 10-year Treasury yield, and you can think of this just like any other chart. It's supply and demand. When yields get way up here, hopefully people will start selling. That's what happened here. They sold into that. Plenty of buyers here so far, but just to zoom out again where we got this line from, that was our previous high back in November of 22. Yeah, October 21st. And this was the first time that rates shot up over 7%. I think they were like a 7.34 then. And if you look at these two lines that we've been touching the top and bottom of, this is basically 6 to 7% mortgage rates. When we get up here, we're about 7.5%. That's what we just hit, a 7.49 up here. So in order to not get to 8% rates, 8% would be somewhere up here. So I definitely spent more time on this in the last video if you want to go back and check that, but all this means for now is we have avoided 8% rates, but don't think it could be for long. As you saw when we broke through this line, we did fail initially, but it only took a few more days till we shot up through the line. So that could be what's happening here with our first failure. We're going to consolidate here and it may shoot through. So just know if you want to see where rates are headed, you can watch the 10-year every day and you can kind of see these lines and what rates they're correlated to. But all this means is for now, we have avoided 8% rates. Hopefully we'll go back into this channel and then all the way back down here. As you can see, there was a time not that long ago that we were shooting for less than 6% rates. So it wouldn't take that much good news to send us at least back into this 6 and 7% channel, and that's why these jobs reports are so important. Okay, moving on to mortgage rates. We started last week at a 7.37. We shot all the way up to 7.49 and ended up at a 7.39. This makes 16 consecutive weeks around or above 7% mortgage rates. That's 4 months. That's a third of the year. Now, regarding mortgage purchase applications, which we track that because that's telling us what demand is going to look like moving forward, we saw a 5% decline this week. A big drop from last week, which was flat. It was a neutral print, the first one this year. So this makes for a total of 14 positive and 17 negative prints and 1 neutral print this year. Of course, it's not really surprising to see that decline, especially since mortgage rates have gone from basically 7% to 7.49% in just 2 weeks. Okay, now let's take a look at our inventory and new listings charts, and these are national data. Okay, starting out with inventory, what I want you to look at is this black dot. Each of these is 1 year away, so you can see we're still from last year lower. But what you really need to be watching is when will inventory start to decline? If you're looking at last year, it looks like we might have another month or two before inventory starts to decline. If you look at this year, we're pretty much starting the decline already. Here, this doesn't count. That's an anomaly. Here, we still have a few more weeks. Here as well, maybe a month or two. Here it started declining immediately. Here it was already in the decline. So basically from now until another month or two is going to be the absolute peak of inventory, and we certainly hope it's not here, because then this black line is going to go way down here. We also like to look at it this way. These are the two previous years, 2022 being the green line and 21 being the blue line. So less homes on the market than last year is also reflected here. The good news is this line hasn't turned down yet, or flattened even. It does look like it's still climbing a little. We can see in 2022 we climbed all the way into November, whereas in 2021 we are about to start the decline. This would have been our peak in just a few weeks. And this is the chart that I want to talk about that we've been looking at for the last few weeks. Is from here on out, you will see less new homes on the market every week. And we actually saw a much sharper decline than expected this week. And that could be because mortgage rates went up so much. Less people want to list their homes because it's even more expensive than it was before to buy the next home. So this is what we've been talking about, is that from here on out, you'll see less new listings on the market, yet inventory will continue to rise up to maybe another 2 months. How can that be? Well, what that tells you is that the undesirable listings that are currently sitting on the market now will just continue to sit on the market for the next few months. So don't let this data fool you. Inventory going up does not mean you're going to have more homes to choose from if you're looking for a nice home. What it does mean is that the less desirable or overpriced homes will continue to sit and stack up on the market. And that's what makes inventory look like it's going up, even though new listings are going down every week. So if you already don't like the homes sitting on the market, you're not going to like those homes next month. Meanwhile, there will be less and less new options to choose from coming on the market from here until the end of the year. All this evidence is telling you is that it's not going to get any easier for you to buy a nice home. As I say every week, if you can buy a house, then buy a house. Don't try to time the market. It's a losing game. Now we're going to take a quick look at the MLS data. Starting with Dallas County, over the last week, we had 304 closed sales. That's 11 less than last week. 428 homes listed. That's 47 less than last week. And 108 of the homes that closed were immediate sales, meaning they went under contract in the first week. And then a new stat that we're going to start tracking this week is this is any home that is under contract or in pending status. And there are 2,239 of those homes in Dallas County. Looking at Collin County, last week we had 249 closed sales. That's 15 less than the previous week. 358 new listings. That's 61 more than the previous week. And 78 of those sales were immediate, which is 2 more than the previous week. And total homes under contract is 1,800. Okay, moving on to housing data, we're going to be looking at Dallas and Collin counties as a whole. Okay, here we're starting with Dallas County. If you follow my videos, you know I use what's called the Market Action Index, and it just takes all of this data, puts it into one easy to read graphic. 30 or below is a buyer's market. Anything above that, and we're just checking how much of a seller's market are we in. We don't go over this that much these weeks because it's just been a slow decline as rates go up and up and up. So as you can see, median list price used to be up to $450 not that long ago, and we've declined the list prices down to $435. Median days on market hasn't really changed in a long time. The number of homes having price decreases actually took a little dip this week. Inventory, still no significant climb. I mean, it's barely going up. And the overall market action index, you can see it was as high as 56 back in May, and it's down to 49. So no real big news. It's literally just as rates continue to climb, things will continue to slow down little by little. And if we take a quick look at Collin County, it's a similar picture. I would say the prices look like they've been hit a little harder. Another big decline this week from 615 down to 606 median list price. Median days on market remains the same. Number of homes having price decreases stayed about the same. Inventory as well is not climbing. And keep in mind, we don't know when the seasonal peak is going to be yet. It could be from here we go down in inventory, or it could be another 2 months. Just depends on which year you're referencing. But no matter what, it is still firmly a strong seller's market. So I don't know what rates need to get this number down to a buyer's market, but we're still a long ways away. And one very important thing I want to say about all this is that we're having this slow, steady decline now, but when things reverse, it's not going to look like that. It's going to happen much faster and harder than this slow, steady decline. The second mortgage rates actually drop, prices will shoot up much faster than they're dropping. Any increase in demand is going to impact prices twice as hard because there's still such limited supply. In May of 2020, there were 6,117 homes on the market. From that point on, we went straight down until we reached the bottom in February of 2022 of 1,974 homes. This is for all of Dallas County. Today, we only have 3,975 active homes on the market in Dallas County. So if we were to see another surge in demand, we would be starting from an inventory point thousands of homes lower than what happened in 2020. So the supply shortage would be even crazier by a lot. And people don't realize this, but from 2019 to 2020, mortgage rates only went from 3.75 to 2.75. It was only a 1% drop. That's all it took to eat up all of the existing supply on the market. That, and of course, there were fewer sellers. But we still have too few people listing their homes, just like we did then. Back then, it was because everything was multiple offers. It was too hard to get another home, as well as people were wanting to stay put because of COVID and the uncertainty with it. Fast forward to now, and people don't want to sell their homes because the mortgage rate on their next home would be way too high and it's not affordable for them. It wouldn't make sense to sell and move. So again, when rates finally do drop, prices are not going to increase in the same smooth, steady way that they're declining right now. They're going to shoot up like a rocket, and it's going to be multiple offers on everything all the time. So all I'm trying to say is, don't try to time the market. You have no idea when things are going to reverse, and it's going to be impossible to buy a home when they do. You're way better off buying a home today, and when rates finally drop, you get to refinance at a lower rate while everyone else is out there chasing prices higher and higher. And if you're still on the fence about whether or not it's a good time to buy a home, please watch this video. Okay, now we're moving on to my favorite part. This is the top 10 ranked charts, hottest and coolest cities and zip codes in both Dallas and Collin counties. Okay, we're starting out with the hottest cities. Carrollton remains number 1 at a 70.31, followed by Balch Springs. Grapevine heats up 1. Louisville heats up 1. Richardson cools off 2. Coppell and Sachse remain. Garland heats up 2. Lancaster remains, and Irving cools off 2. Then we like to zoom in and look at specific zip codes. The absolute hottest is Carrollton, Texas, 75007, and it's at a 73.12, followed by Richardson, 75082, Garland, 75041, Carrollton, 75006, Plano 75023, Balch Springs 75180, Mesquite 75150, Garland 75044, Carrollton 75010, and Richardson 75081. So these are the absolute hottest cities and zip codes in all of Dallas and Collin counties this week. Now moving on, we're doing the exact same thing but with the coolest cities and zip codes. Leonard officially falls back into a buyer's market. Remember, below a 30 is a buyer's market. So it retains the number 1 spot and becomes a buyer's market, followed by Whitewright, which retains its spot. Sunnyvale cools off 3 spots. You can see it just dropping right off the map there. Blue Ridge heats up 1. Ferris cools off 1. Salina cools off 4 spots. But I want you to notice all of these spots are a 40 point something, so we're just talking about very few decimal places here. Van Alstyne remains. Rockwall heats up 2. Farmersville heats up 1. And Red Oak heats up 1. So obviously the big news this week is Salina cooling off 4 spots, but again, we're talking about a few decimal places on all of these. The big jump really is from Ferris at a 34 to Salina at a 40. All right, well that's it for this week. I'd love to hear your thoughts on what the upcoming market is going to look like. And as always, if you're looking to buy or sell in the Dallas area, whether it's next week or next year, just call, text, or shoot me an email. Thanks for watching. I'll see you in the next video.